I've hit goals I've wanted to hit, got over 500k in funding. I could probably pick out why someone's not profitable. I think a lot of people want shortcuts in this industry, but the answers are...
Most traders think that success comes from finding the perfect strategy, but today's guest actually discovered that it came from changing who she was as a trader.
You know, a lot of people get scammed by Forex sellers, me being one. Did I get scammed and give up? No.
Our guest today has a story that most of you can resonate with. They were chasing signals and trying to scalp the 1 minute chart. But for them, nothing changed until they actually stepped away from the noise. Today's guest is Kayz. She found her edge when she moved to higher time frames and she simplified her approach and focused on discipline and her identity.
So I'd say to myself in my head, I'm a 7-figure funded trader 3 times. Unconsciously, I started acting like it. I wouldn't go blow an account because 7-figure funded traders don't do that.
She took the uncomfortable path of sharing her journey publicly, and she documents the wins, the setbacks, and the uncomfortable parts of growth in this game.
I feel like I'm so closed.
You're gonna walk away from today's episode understanding exactly why consistency often starts with an identity shift long before your results actually show up.
If I was to trade a 1 minute fair value gap and trade the way that I trade on there, I don't think I would be profitable. I don't think the strategy would be profitable.
Your strategy is very rooted in, is it fair to say?
Yeah.
Let's get into it.
I want to get stuck in if you don't mind.
It's fine.
So talk to me a little bit about what actually happens on the charts now. Because you mentioned regardless of high impact or low impact news days,
Yeah.
you kind of have the same approach. You're analyzing the market in the same way. What does that start to look like for you from the top down?
To be honest, it is literally quite literal top-down analysis. Start with briefly looking at the monthly and not doing too much on there. And then dropping down to the daily, 4 hourly. I don't really look at the hourly unless I'm trying to get in on an execution. And that's about it. I don't look at lower time frames. I'm not on the 1, the 5, the 15. Just purely, my bread and butter is 4 hourly and daily.
Okay.
Yeah.
So could you draw me an example of what you would be looking for example, on the daily chart that would get you interested in maybe wanting to take a setup?
Very, very simple. And this is like a key thing that helped with my strategy is the simpler it is, very simple. You might be surprised.
No, not at all.
The better.
Let's go.
So let's say this is higher time frame. We're trending bearish.
Mm-hmm.
We've created a fair value gap. Honestly, and because we're on the higher time frame, all I'm looking to, let's say we created another one here, I would basically look at these areas here and wait for price to come here to react and then trade the continuation. Or, you know, price might come up into this fair value gap, react, and then distribute.
Okay.
Yeah.
So your strategy is very rooted in, is it fair to say ICT concepts?
Yeah.
That's what I associate fair value gaps
Fair
with.
value gaps, order blocks. I don't know. I think a lot of things are under ICT now. So whatever you guys want to call it, really.
Fair enough. Okay, cool. So this is what you're looking for from a daily perspective.
Yeah.
And then I presume when you mentioned you kind of have that top-down approach, once you've identified these areas on a daily chart, are you then dropping down a time frame?
Yeah, so I would drop down really on the 4 hourly. So if I show you now, so like, let's say we have these fair value gaps now and, you know, prices enter them because not always price is going to give you that reaction that you want. Mm-hmm. So you have a fair value gap right here. I'm not going to just enter off this because I'm trading higher time frame. You know, the chances of it reacting is just as likely as it not reacting.
Right.
So I'll wait. So when price gets here, now I'm waiting. So I won't be trading the daily. I'll be looking at the hourly and the 4 hourly now.
Okay.
So now I would wait for a reaction. What is a reaction? It could be an hourly fair value gap. Mm-hmm. It could be a 4 hourly order block formed. And then I'll just wait for that tap and that. And that's pretty much it. I don't like to overcomplicate it because at the end of the day, with higher time frame, there's less to look at.
Right.
There's less to analyze. And the simpler it is, it's easier for me, to be honest.
So this is probably going to sound like maybe a stupid question, but I kind of want to tailor this to traders at all levels.
Yeah.
So when we talk about the idea of a fair value gap or an order block, how are you characterizing that? Like what specifically are you looking for? What makes a fair value gap? What makes an order block in your eyes?
So a fair value gap to me is inefficient price action. So, you know, you get a lot of fast movements in the market and that will leave inefficiencies, also known as fair value gaps. And I'm sure there's probably other words for it.
Yeah.
And that just means we've got a lot of volatility in the market. You know, a lot of orders are coming in. Prices typically could be manipulating, could be distributing, but we're seeing a lot of movement and a higher or larger range compared to what we was trading before. And the same with order blocks. I just see it as, you know, a buildup of orders, and then we see some sort of reaction from there or distribution from there. And then it's a candle, really.
Gotcha.
It's an area of interest.
So again, I just want to make sure I'm understanding this correctly. So the fair value gap here, you would see this as kind of one large move down with no kind of price action in between, no wicks or anything like that. Is that right?
Yeah, perfect. So so if we can show you right now. So obviously every candle can form. You can get a fair value gap on literally any time frame.
Okay.
So if I just draw out 3 candles. So if you go from the first of the candle to the third of the top of the third candle, there is your inefficiency right here. So that is inefficient, and that's because the previous candle didn't fill out the candle after, and then the candle after. I mean, that sounds complicated. Honestly, I like to keep it simple. It's really a naked candle. Okay. There's no wicks filling it, either from behind the candle previously or the candle after.
Gotcha.
It's just inefficient.
And you mentioned there's an element to what you do that is a little bit discretionary.
Yeah.
Is you trading inside that fair value gap kind of a mechanical part of your plan? Like all your trades always happen off of that narrative?
Honestly, no, because a lot of setups, yeah. Okay. Because at the end of the day, if I was to trade a 1 minute fair value gap and trade the way that I trade on there, I don't think I would be profitable. I don't think the strategy would be profitable.
Okay.
But because they're 4 hourly and they're daily candles, they hold a lot more strength in the market. So you will see it. And if you don't see it, then you might be looking at something else. I might see, you know, a liquidity sweep, and then I might see an order block formed, and I'm happy with that, and I might just enter. Whereas this is like my ideal setup, a fair value gap, yeah.
And one thing I'm curious about, I understand that this kind of, this gives you context of like maybe an area of price where you want to trade.
Yeah.
How do you go about determining bias? Is it literally by like you're looking at the structure of price going up and down? Like how does this work for you?
I think honestly, something that helps me was genuinely just market experience, because now I can just come on the charts and just know where the price is going to go. Whereas I think if I was to be a beginner and want to learn, I would just say pure market structure. If we have, you know, we're trending upwards, but we're trending like barely up, and it's just that just looks like a buildup of orders. And, you know, to me, that would just look like price will want to take that liquidity. Whereas if I'm seeing strong pushes, I'm thinking, yeah, that's strong, and I will be happy with my bullish bias.
Okay, got you. So do you predominantly trade like with the trend, against the trend, or does it not matter for you? Is it kind of just whatever your discretion or gut will tell you at the time?
All the time, no, I always trade with a bias. So I always come into the week with a bias. I have a weekly bias, which with my swing strategy, I'm aiming to catch pretty much the high of the week to the low of the week. So I'll catch that weekly candle.
Okay.
So when I catch that weekly candle, you know, you're only ever going to get a bullish or a bearish week. So regardless of which one, that is basically what I'm trying to trade, is that weekly candle, that bias.
So what goes into forming that weekly bias? Is there something specific you're looking for from the daily perspective that's giving you an indication that this week we might only go up or down?
I think a lot of it is like market cycles, and there's a lot of market patterns. So a big thing, if I can show, I'll draw it out for you. So a big thing that I look at, a key market cycle that I look at is that Mondays tend to range. We have less orders. Tuesdays or Wednesdays will tend to manipulate. And then Thursdays to Fridays, this is roughly, don't quote me, we will have the distribution. And then Friday could continue, or we will retrace back into the range. And this is a typical cycle. Same if it was to be a bullish week, you know, we get some accumulation, we get manipulation, take that liquidity, distribution, and I will typically catch this leg right here.
Okay.
Yeah.
So you're mainly, I presume from how you've drawn that, you're looking for like the meat in the middle.
Yeah. Yeah.
Right? That's kind of your bread and butter.
Yeah.
Okay. That makes a lot of sense to me. The one thing I think maybe I want, or at least for me, a little bit more clarity on is the order blocks.
Yeah.
Because at least from my understanding, I know that these are very popular terms that a lot of people use, but people seem to identify and draw them a little bit differently.
Very differently, yeah.
What's your interpretation of an order block, and how do you go about trading them?
Honestly, I think the best way I would define an order block is just an area or key candle before a big move, whether that's a bullish move, a bearish move. It's just the candle or the area before that. Okay. And that's a key area because that's where price pushed up from or pushed down from. So price is likely to return to that area if it does and react again or disrespect it. And then you can trade from that again. But yeah, I think I typically just like it as an area. I don't like to have strict candles or strict price levels. It's just an area where price was accumulating and then we saw a massive push from it. It's that area right there.
Got you.
Yeah.
Got you. So do you find that, at least from how I'm envisioning this in my head, and I think this will probably be clearer when we jump onto some charts shortly, do you find that actually order blocks and fair value gaps can sometimes come like with each other, if that makes sense? Because you'll get order blocks, which you've described as kind of like a consolidation in price.
Yeah.
Then the expansion will create the fair value gap.
Yeah.
And then you're looking for kind of a return to that sort of area to do business.
Yeah. Okay. So I will never enter. So a lot of people, they will put limits and they enter and they know that they're going to enter a lot of time before they actually enter. Whereas me, I will always wait for a reaction. Okay. So that reaction is, like I said, could be a fair value gap formed, could be an order block formed on the higher time frame. So to me, I like to take the most probable trades. Why am I trying to take something that's risky? I'll just wait for that confirmation. And again, because I'm a swing trader, the risk to reward and the pips that I can catch is a lot, do you know what I mean? A lot larger. And because it's a high probability win rate, I can afford to just take, that 2R, that 1R, because it's high probability.
Got you. All right, so this seems pretty clear cut to me. I think you summed it up really well at the start. It's a very simplified approach, which is not a bad thing by any means. I actually think it's the way most people should be going. But this clarifies for me a lot of entry.
Yeah.
I have a few other areas which I want to understand a little bit more about, because I actually think depending on how you manage or tweak these areas, it can make the difference between making money and losing money.
Yeah.
So this for me is all what I would classify as entry requirements, right? What actually you're looking for to get you into the market.
Yeah.
Once you're in a trade, talk to me a little bit about trade management. How do you go about, are you kind of one of these like, you leave your stop loss and take profit and just let price do its thing? Or are you actively trailing it?
I wish. No, I mean, I think it is just part of human nature when you're in a position. I know a lot of people say set and forget, but for me personally, when I'm in that position, I'm staring it down. And yeah, I mean, I've got to a stage now where I'm comfortable in trusting my analysis. I know that if I was to be a beginner or maybe my emotions weren't controlled, it would be hard for me to watch it over a long period of time and see a retracement, and then I'd want to rush to get out. Whereas now I can watch it. I could be, going back to break even and I'll be okay because I know the analysis and the setup is there. So yeah, I still watch, I still monitor, because at the end of the day, I've entered the trade. I do want to see how it's going. I want to see if it's going to close me out. I want to see if it's going to take me out. So yeah, I am watching it, yeah.
So are you then trailing your stop loss as price is moving in your favor? Like, is that something that you're actively watching and trying to do?
So one thing that I would always do is that I will only move my stop loss to a invalidation level.
Okay.
So for me, in this example right here, my invalidation level would be this high.
Okay.
Why? Because I think it's the high of the week.
Okay.
So I don't think in the week price is going to go above that level. Whereas if, let's say, price was to... So let's say we created a fair value gap and price was to retrace, and then let's say I've scaled in, got in another entry, and it's distributed, and now price is around this level, my stop loss would now move to this level. Okay. Because I don't expect price to come all the way up to break this level if we're truly bearish.
Got you.
So I will only move it when a new invalidation point has happened. But if I haven't seen that, I'm still in. Even if I could be floating in a lot of profit and then go all the way to drawdown, I'm still in if there's no new invalidation.
How often does that happen to you? Because I know, and I always say that whatever style of trading you choose, you have to accept pain.
Yeah.
Right? I think whether you're a scalper, an intraday, a swing trader, a position trader, whatever it is, there's a certain degree of pain that you have to deal with.
Yeah.
So for you, like being in this position where let's say you've entered in over here, prices come down in your favor, but it hasn't hit maybe your final objective down here. How often does price come back and then actually just, you end up giving all your profits back?
To be honest, it doesn't happen a lot. Obviously it happens, but I think where I like to take profit is at a key area. So I will never stretch for the craziest RR. I'm okay with a 1R, a 1.5R, 2R. A lot of people think that's low, but if it's yielding me results over weekly or monthly, then why not take it? So, when I have a key area for take profit, it does typically go there. And if it does start to retrace, which has happened, I'll accept that loss because, like I said, I will only put my stop loss at an invalidation. If it hits that level, then the bias is wrong. So
trading education is completely broken. For years, the industry has been purged and poisoned by bad actors, fake results, and strategies hidden behind paywalls. But in every industry, every once in a while becomes a catalyst, a moment in time for change. Now imagine a world where elite trading education was entirely free. Education with no hidden agenda, verified trading results, and real profitable strategies, all for free. Welcome to Chart Academy. Chart Academy is the world's first all-in-one platform for trading education. Chart Academy is free. No catch, no upsells, no strings attached. World-class trading education, completely free.
Hi, my name's Randy Howell, and welcome to my Chart Academy Masterclass.
This is completely revolutionary. The biggest change in trader education in 20 years.
My name is Carmine Rosado. I'm a verified 7-figure trader. I've been trading for 10 years now.
The reason why a lot of traders fail is because they...
Ultimately, this work is about self-mastery.
Trading education will never be the same again.
Browse hundreds of hours of content in Forex, futures, stock, options, and crypto from the best verified traders on the planet, all in one platform. Experience a completely personalized trading plan tailored to you and your goals. Reach milestones, redeem points, and earn rewards with a massive global community. Whether you trade Forex, futures, stock, options, or crypto, Chart Academy has something for you. Join the waitlist now and be part of a movement that is going to change trading education forever.
And you mentioned that your exits for a trade, in terms of specifically take profit, you mentioned they happen at a key level.
Yeah.
What is a key level for you?
A key level, I would say a key level could be anything, to be honest. It could be a fair value gap. It could be an order block. It could be a liquidity area. And this is where a lot of market terminology comes in there, because a lot of people might learn the fair value gap and the order block, but then they're like, what's liquidity and how does it all tie in? But when you structure them all together, it does tie in. So like for example, if I was to close out on a trade, we're on a daily time frame. Let's just say right here, we'll show it on the example. This is on the daily time frame. Before price played here, my take profit would want to be this area. It's an area price has already gone to. It's a likely area that price is going to go to again if we're truly bearish. So I would just take my profit right here. I'm not going to go right here when there's nothing telling me to get out here, because it's just not worth it to me. It's not worth it. I just like to get in, get out, take my move and move about my day.
So your exits are always based on a specific like structural point of price?
Yeah.
Is that a fair point to say?
I would say so, yeah. I would say so.
I ask because I know there are some people that have very mechanical systems where they will get out based on like a specific risk to reward, for example.
Yeah.
But you don't care about that.
No.
You're happy to compromise risk to reward as long as it gets you out a sensible area.
Yeah, so like a lot of people have fixed RR.
Correct.
Yeah. No, I don't have a fixed RR. I have a rough RR, like a 1.5, 1.7, 2R. It is low. Yeah. But I will take it if the strategy's there, if the setup's there, I'm going to take it. Like I said, it's a higher probability trading system. So that's what I take.
I feel as though when we talk about like risk to reward and you say, you take like maybe 1 to 1, 1 to 1.5, 1 to 2, and we consider that low.
Yeah.
Personally, and maybe, we'll expand on this in the podcast as well, I feel like that's a lot of like social media brainwashing.
Probably.
Largely because, at least from my experience, win rate and risk to reward, they work inversely, right? So if you aim for a much higher risk to reward on all your trades, your win rate is subsequently going to be lower. And I think the key is, by the way, that relationship is obviously works vice versa as well. But the key is finding the thing that works for you as a person, right? Not everyone is going to be able to handle a very low win rate. And some people are going to struggle with a very high win rate, but knowing that they've missed out on a big chunk of the move if it keeps going on some occasions.
I think with trading, you have to find what is best for you. And I think, you know, a lot of us, you know, when we're finding a mentor, when we want to learn a strategy, we are going to look up to someone. If they're making a lot of money, we might tend to learn from them. If you can see they're posting payouts all the time, we might tend to learn from them. But, you know, whether that's a high RR, it does come with a lot of losses, but those traders are not posting those losses.
100%.
But you guys are trading that system now, but you're incurring those losses, and now you might be thinking, oh, trading's not for me. Whereas these people might be still posting a lot, but are less frequent, but they're taking less losses. But you will only know that when you're actually trading. You cannot tell from social media. You won't be able to tell. You have to trade to find out what works for you.
100%. Okay, so last thing I kind of want to touch on before we maybe jump into some charts and actually see some real examples of this. We've talked about entry, we've talked about trade management, we've talked a little bit about exits. How do you manage risk? Do you have a specific like percentage of your account that you're risking per trade? Like, how does that work for you?
So it's different. Funded stage and live stage, very different. Because funded stage, at the end of the day, it is a challenge. It's not real money. It's that risk that you have to just get there to pass. So I do risk a lot, and that's because my RR is lower and my trade frequency is lower. So I can afford to risk, you know, 3% on a challenge, purely because that's, you know, intraday traders are trading 3 times a week. They might lose that 3%. I'm trading that one setup, risking that 3% in that one shot. And if I'm wrong, then I'm wrong for the week. So I can risk a little bit more on challenges. So it's a little bit up. But with live, it is just 1%. And yeah, the good thing about this strategy is because I can stack entries. So like I said, a perfect scaling would be right here. And you know, you got this entry from here, and now you've got another one. Automatically and naturally, that will add up. So, you know, I don't need to risk too much on that.
Yeah. All right, perfect. I think that makes a lot of sense, at least from obviously seeing it in theory. I think what would really help both probably myself and people watching this is maybe if we jump in and see some proper examples.
Let's do it.
Okay, cool.
Okay, cool. So we are on the charts right now, and you can see a position that I took, and I'm going to break it down for you. So a good and a key thing that I like to do is, you know, price is a lot of things. You know, you could scroll back for days and days and days. But the most important is the recent leg. What is price doing now? Where is price wanting to go now? You know, you might be looking at that and think we're trending bearish, but I like to know what's happening now. Now, at this time, as you can see, we saw a big push up to the upside. Now, for me, that has made my bias switch. As you can see, we've had a clean breaker structure from this structural high. And to me now, my bias is bullish, simple. Don't like to overcomplicate it. And that, like I said, it's clean because this massive fair value gap's been created. This is not just one. We see another one just over here as well as if someone, so I would call this area order block 2. But yeah, so there's a lot of key things for me to want to enter now. But again, I'm not going to just enter off the back of it. Like I said, I've marked out this fair value gap. Now I just want to wait for price to enter. So price has now entered this fair value gap. And like I said, we don't just enter off, you know, the tap of the fair value gap, because look what's happened. Price has actually pushed all the way down, and it's actually some on a lower time frame would have disrespected this fair value gap. And some may say now it's shorts, whereas this is why I always wait for confirmation. Now, for this example, we've seen the retracement. We're not scared of a retracement because we expect it. We want that. But now we want to see the reaction. Now, in this case, the reaction is right here. And because I'm trading the 4-hourly time frame, it's a lot stronger for me to just say then, to wait for the 4-hourly candle close than to just enter. So in this case, look, we've seen a retracement into this fair value gap, as well as seeing, you know, there's another fair value gap below that. So even if it was to go further down, it just wants to, you know, take up more orders. We've waited. We've seen a clean sweep of liquidity right here. And now look what price does. It starts to range because it's got less selling pressure in the market. Well, I'm still waiting. Doesn't mean I just enter. I'm waiting. And then look, we see this massive 4 hourly fair value gap created, or 4 hourly candle, because obviously at the time of entry, it wouldn't have been a fair value gap. But I see this nice clean push. And because I was somewhat expecting it, that for me was enough to enter. So again, I will enter around here, put my stop loss at the low of the week, which is right there. And then again, you can target the closest point of liquidity right here, or you can target the next, sorry, let me zoom out. Or you can target the next area of liquidity. So for me, in this instant, was this area and this high right there, which you can see price easily took out, and it did end up taking a lot more higher areas out. But if you actually zoom in to look what happened, you know, we was bearish, but we broke that structure. We've left an order block. We've left a fair value gap. We've left another fair value gap. And not only that, look how big they are. They're massive. And stuff like this, when you're on higher time frame, they are important. You know, that holds a lot of strength. So yeah, we've got a retracement, wait for that reaction, which you saw right there, enter, target, next area. So yeah.
So a couple of questions, and again, this is from my eye. So when, let's say before all of this stuff happened, right? But as the retracement is starting to happen here, you would have had one fair value gap in this area, and then you would have also had one down in here. And what you're waiting for is to see where price reacts from. Okay. So to me, and again, this is what I kind of just need more clarity on. There, inside of this retracement here, there's kind of two candles that stand out for me. One is the one that you entered on, and one is probably this one.
Okay.
What for you makes this candle different from this one? Because this for me, I would classify as almost like a bullish engulfing. At the time, maybe if you're, you know, if we were to replay price and get rid of this kind of retracement from here downwards, would you class that bit as a fair value gap as well? Am I seeing that correctly?
I think with this one, I think there was potentially might have been news on this day, but I'm not sure. But with this, because that's a very good question. So like, I could have easily entered here. But again, does that low look strong? To me, no. Am I confident in saying that's a strong low within that fair value gap? No, because it is equal lows at the end of the day. This could be easy, like the market could easily come down, take that, and then shoot up. So for me, that wasn't a strong reaction. Whereas for me here, this took this low and it's pushed. And then I've not just entered off that push. I'm waiting. And bear in mind, these are 4 hourly candles. So when you see that push, because you know, look, it's retraced deep and it's in the discount of the fair value gap. So you've seen that reaction. And it does, and this is why I say discretion comes a lot with this strategy. I know if I was a beginner, I probably wouldn't be able to trade it. But because I know how the market moves as a whole, you know, it's very simple for me to see that this is a weak low, whereas this is a much stronger low because we see, you know, a liquidity sweep before.
Yeah, got you. And maybe I'm getting ahead of myself here, but from what you were showing me on the whiteboard, would there have been a potential opportunity to maybe scale in here, or is that something that you were looking for? Because now I'm seeing like you've obviously got a target at the top. You've had price after you've entered come down and start retracing here. This is to my eye again a fair value gap. Would this have been a potential area where you're thinking about scaling in or trailing stops in some way to add on before it gets to your final target?
Perfect. You know the strategy. you know the strategy already. That would be a perfect scaling. And this is what the market does a lot of the times. You know, you can look at it yourself. You just noticed that, you know, a fair value gap's been created. We have the clear target, whether that's that one or whether that's the one above. And you can come enter. I don't think I entered on, well, I didn't enter on this one purely because it was Friday. Yeah, so I don't really like to enter in on new positions on a Friday. And that's because of that market cycle that I told you. Mondays, you know, you usually have accumulation, Tuesday, Wednesday, manipulation, and Thursday, Friday, some sort of distribution or what's it called? A retracement back into the range. So yeah, and that's where the discretion comes in. Because if this was on a Tuesday or if this was on a Wednesday, that would be lovely. I'd be in that.
Got you.
And yeah, I mean that is a strategy.
So what you mentioned obviously the cycles in the market throughout the space of the week.
Yeah.
Does that mean that by, let's say hypothetically in this position, if we came to Friday and let's say price was still only down in here and we hadn't had this expansion yet, would you go flat on Friday close and then look for another entry again on Monday? Like how would that work?
To be honest, potentially, yeah. So a lot of it is kind of, you want to see how the market's moving. If this candle was created with a lot of, very quickly, you saw a lot of pressure, selling pressure come in, and then you're seeing it's ranging for a lot of times in the key areas where you want price to, in London session, New York session, and it's doing that very fast, potentially. But with this, because I saw this fair value gap, I was confident in longs anyway. It could have happened on the Friday, it could have happened on the Monday, it could have happened on the week after. But with this case, I trusted because I saw that. I think time does matter as well. You guys have to check your times because sometimes this could be happening at, I don't know, this could be happening in Asia session. It doesn't really, to me, that won't bother me. But if it's happening later on in the day, then I'll get out. But because the day was only at 10 a.m., we've got all day to see a reaction, which is why I held and waited on this case.
Okay, let's take a quick break here, and I want to tell you about a prop firm that's actually trusted and proven to pay their traders. There's only one name you need to know about. It's Traderfy. You see, Traderfy Futures is one of the most trusted names in the industry. They've had consistent and stable operations over the last few years, and they've paid out over $125 million to traders. The best part about doing business with them is there's no hidden rules. There's no denied payouts. As long as you hit your objectives, you get paid. It's pretty simple. Now, here's what Traderfy gives you that actually matters as a trader. They've got flexible plans in place that you can get paid out daily. You've got the ability to pass evaluations in just a single day. And if you don't even want to mess around with evaluations, they've got instant funding plans as well. Honestly speaking, their dashboard is one of the best in the game. They've got an inbuilt journaling process that allows you to trade, track, and improve your results over time. That's how real consistency is built. Now, before we get back to the episode, I want to share a massive update. Traderfy Crypto has officially launched. This is going to give you better pricing for crypto-funded accounts. And you're also trading with institutional liquidity from exchanges like Binance, OKX, and Bybit. This is honestly giving you the best trading conditions possible. On top of that, the payout setup is simple. On-demand payouts. If you hit your objectives, you get paid. It's as simple as that. I personally think regardless of whether you trade futures or crypto, Traderfy is the move to make. Now make sure you use the code PFT at checkout to make sure that you get the best deal available. Links in the description below.
So specifically, again, just on this example, would this, if hypothetically, let's say this was on a Tuesday or a Wednesday and you're looking for that potential to scale into the position, does this give you an opportunity to do so? Because, and again, I'm going off my understanding here, you're waiting for a 4-hour candle close. And that for me happens here.
Yeah, too far.
Yeah.
No.
So I presume from like maybe a risk to reward perspective, that would then be invalidated or?
Yeah, so there's a lot of setups I can see, but because the RR is just not worth it, I won't enter because there's no point risking 1% on a setup for it to just get me 0.5%.
Okay.
So this is when I would drop onto the hourly time frame.
Okay.
Shall I? I think
up to you.
It might reset me. So jumping onto the 1 hourly, you see market's different now because that bullish structure, it doesn't look that strong. Even though we pushed a lot, it doesn't look that strong. But like I said, higher time frame always holds strength. So if the 4 hourly looks clean, I'm not bothered about the hourly. But in this case, if I can see, I'm waiting for that re-entry, price is chopping, I'm going to wait for that hourly. So now I probably wouldn't enter here. I probably would enter around this retracement here on this candle because I've seen enough reaction. That bullish candle looks very bullish, even though the candle after did go, because we're in the, you got to put everything together. We're in the higher time frame bullish. We're expecting this key liquidity to be taken out. We've created a fair value gap. All we're waiting for now is a reaction. And when we see strength of like that, yeah, I'm happy.
Okay.
And I'd get in around there, put my stop loss around here. And in that case, my stop loss would be at the low of the day instead of the low of the week.
Yeah.
So it would just be the same type of setup, but on a different scale.
And so you'd also have your initial trade, your stop loss, I presume, will go to the same place?
Yeah. So whenever I have a new invalidation, it would move. It wouldn't just move when I'm here. When price is here, I wouldn't just move it. When it looks clean, so when it's like up here, then I'm happy enough to say, yeah, actually, price isn't going to come down here unless we shift bearish. Yeah. Unless price is wrong. And that does happen sometimes, but I'll only move to invalidation levels when they're created.
Okay. Yeah, that kind of makes sense. It looks pretty clean. It matches, like you said, I've been able to identify it. So it matches what you showed on the whiteboard.
Simple wins.
So cool, I like it. Have you got any more examples that we can run through?
Let's have a look on GU. Okay, cool. So we've got another setup that I've took. You know, we've got different markets and I took it around this area right here, which I'll show you. But I have this key level marked out, and this key level is very important because it is a previous year high. So obviously we've come into the new year, we mark out key levels like previous year high, previous year low, and we expect some sort of reaction from it. We don't know whether that's bullish, bearish, but we're expecting a reaction. So I've had that level marked out. We can see prior to that, price has moved extremely bullish. Why? Because it wants to take out that liquidity. But what happens when we've took out that liquidity? That bullish pressure has now slowed down a little bit. And again, because we've took that liquidity out, I'm expecting some sort of reaction. So let's now jump onto actually, let's zoom in, right? So if we zoom in on what's happening, like I said, I only focus on the recent leg. I don't like, you know, the left is important, but at the same time, the left could be irrelevant. So in this recent leg, I can see prices took out this key level. So now, again, I'm not just going to assume and just enter. I'm going to wait. Now what has price done is created a fair value gap on the daily time frame. That is a higher time frame area of interest. Again, we've took out a yearly high. We're waiting to see, we're expecting it, you know, that's how the market moves. It likes to seek liquidity. It's took out that liquidity. We're expecting some sort of rejection. And we've seen that fair value gap. So now I'm thinking, I like this bias. I'm thinking shorts could be a potential opportunity, but I'm not just entering. Like I said, I always wait. So this is where I'll jump down onto the 4-hourly time frame. Okay, so I've marked out that daily fair value gap. And because, like I said, a yearly high is a very key area. It's not just a, 4-hourly high. It's a yearly high. We're waiting, and look, this looks beautiful to me. This is beautiful accumulation. We're not seeing a lot of orders. We're not seeing heavy bullish pressure. We're not seeing heavy bearish pressure yet. We're just seeing price go up and down, but slowly going up to that fair value gap. Like I said, we don't get scared of retracements. We expect them. We want them. So we're seeing this pressure. To me already, this is exactly what I want to see. We've seen daily bearish fair value gap. We're waiting for a reaction. The way that we're moving to it is very, very slow. We're accumulating a lot of orders. And then look what happens. We're waiting for that key high to be made within that fair value gap. And then again, it distributes. Now, again, you're probably looking at this saying, where do I get my entry? Right. And this is when I will drop down onto the hourly. Okay, so the strategy is the same, regardless, it's the same, but the entry that you might see is different. I can't say that I have a set criteria, mechanical model, because it is different. So in this case, we've took out yearly highs, we've accumulated orders, the bullish pressure is very weak. It's somewhat a perfect setup to me because it's very clear. Now we've got that daily fair value gap marked out, and we want to see a reaction, whether that's disrespecting it or respecting it. And that's why I always wait. So as you can see, chopping around. And then we see this nice, to me, very nice and clean bearish 1-hourly candle close. Again, the wick is very small, which means the pressure is very strong. And for me, in that instance, it was okay and it was enough to enter. So I must have entered on this candle and put my stop loss at that clear high of the week. Now, why do I think it's the high of the week? And this is when the market cycle comes in. So if we actually look at the days of the week, so if I mark it out, actually makes it easier. Okay, so this is when the market cycle comes into play, when I said accumulation, manipulation, distribution, also known as the AMD. But yeah, okay, cool. So I've marked out the weekly days for you. So we have Monday, which is over here. Now, if you see Monday open, it's around here. Monday close, it's roughly the same.
Okay.
So really, we've not seen any movement. Yeah, you might say bearish. Lower time frame traders might have got in on that. To me, it's not important. We've opened and closed near enough the same place. With Tuesday, again, we've accumulated. We've not seen nothing. So we're still waiting. We're not in a rush. And I know when it comes to actually on the day trading, it might feel like you're not progressing and you're not trading, but you know, you're just waiting for the market to give you what you expect to see.
Yeah.
And then we come on to Wednesday now, and this is where I said the manipulation and the reaction sometimes happens. This Wednesday has created that start of the distribution move, because if you look on Monday, really, truly, we've closed. Yes, we've tapped in, but I actually don't trade Mondays on my strategy. I just take them out because trading them, I have more losses. So to be honest, I wouldn't have even looked on Monday.
Okay.
But yeah, Tuesday, again, ranging. But we're making our way up to that fair value gap again. And if you see, it's took Monday's high. So if you was to get in on early and saw that tap and got in there, you would have been stopped out on Wednesday. So that's, for the strategy, Monday isn't really probable day of trading.
Okay.
So we come on to Wednesday. We've seen about 8 a.m., we've seen this high. And then it's come to 1 o'clock. This potentially could have had a news day as well. 1 o'clock, and then it comes to 2 o'clock. Again, times do matter because that is when most liquidity is in the market.
Okay.
You know, London session, we've seen that high made. It's just been chopping all of London. We've not seen anything. Comes to New York session now, and we've already somewhat dumped. We've started that distribution. And remember, with everything that we've put together, it's making sense now. You're like, oh, okay, it's painting a picture. So I would get in. I'm happy to say that's high of the week. Like I said, it's took out Monday's high. It's accumulated. It's built up liquidity. It's tapped that fair value gap again, daily fair value gap.
Yeah.
Then we saw an hourly strong rejection candle and a get in. And I've got key areas to target again. And then with the same as this one, it's a clear sort of scaling. We've seen this in the move down. We've seen a fair value gap create there. We've seen a retracement in there. We've seen a reaction. So on the lower time frame where you see this wick, that would have been a big move down.
Right.
So to me, I was like, okay, it's doing what it needs to do. I've waited in somewhat, I think, on the lower time frame, waited in to get on probably the equilibrium right there. Again, I'm happy with that high being my new invalidation because is price going to come up all the way to this high to retest it? If we're truly bearish, no. So get in and then target the same level. The RR might be smaller, but again, they both add up. And that is the strategy. It does happen. It plays out a lot, but patience is a very big thing with this strategy and a lot of people can't do it. And then with this again, moving on to Friday, look what happens. We've got less market volatility and it's gone back up into the range, which is why I wouldn't necessarily trade on a Friday.
Yeah.
And Tuesdays and Wednesdays really are my favorite days. When they're good, they're good. But yeah, because that's when the distribution happens.
So the context of this week is kind of like textbook from what you kind of demonstrated there. Mondays are generally flat.
Yeah.
You get you call it the manipulation on Tuesday?
Tuesday, could be Wednesday, one of them, yeah.
And then distribution Wednesday to Thursday?
Yeah.
And then
Tuesday could start off the distribution and Wednesday can continue Thursday. If Wednesdays hit the draw on liquidity, you know, I'm not interested. When that weekly draw has been hit, I'm not interested in trading. It might be hit on Wednesday, it might be hit on Tuesday.
Okay.
Thursday, then I'm done. Yeah.
Got you. So I have one question, and this for me, again, maybe it's just my eye being picky, or maybe it's the discretion or the maybe gut feel that you have from trading this.
Yeah.
To my eye, and I remember one thing that you mentioned on the whiteboard.
Yeah.
Would you not class that as like a short-term double top? Would that make you nervous about keeping your stop behind that, or is this kind of again one of those kind of gut feels that you think this is going to be it?
This is where discretion comes in a lot. Because a lot of traders will look and think that's like, it's chopping. Price is easy going to use that as liquidity and then dump.
Yeah.
But to me, it's like all this liquidity, all these days, we're not talking about minutes, we're not talking about hours. This is days of built up. So when you just see that one candle, it's like, okay, that's strong. Because really and truly, look at it, it's not created no strong move. So when you see that strong bearish move in your direction, you know, we've had this strong candle here, but look, it got disrespected. It didn't tap into the fair value gap. But when it did, you know, it does come into play. Also, I don't really tend to look too much at like double tops sort of stuff like that. When I've got the bias in, because the bias was already there from when we swept liquidity.
Got you.
So it does all just tie in. When you add thing onto thing, it paints a picture.
Yeah, got you.
You need the #1 trading tool for traders. Introducing TradeZeller. It doesn't matter if you're a Forex trader, a crypto trader, an options trader, or even a futures trader. TradeZeller is for everyone. To be profitable, you need to have an edge. TradeZeller allows you to identify, manage, tweak, and refine your trading edge. You can connect unlimited accounts to TradeZeller. It will pull all of your data onto a dashboard. It gives you in-depth analytics, and this makes journaling so easy. You can add playbooks, trade replay, full back testing, all in one single tool. By using TradeZeller, you'll not only understand all of your trading data, but you'll get feedback on exactly what's working and what isn't. Use code PFT for 20% off the yearly subscription, or PFT10 for 10% off the monthly. Try it out and watch your trading transform.
One last question for you, and again, this is just me being curious. If hypothetically you entered exactly where you did, hypothetically, let's say price came out and stopped you out, but then rejected, and did something very similar to what it did here, but a few hours later, would that for you warrant a re-entry? Would you give it a second attempt with the same idea?
Yeah.
Okay.
Because really, my trade idea is still there.
Yeah.
It's still the setup. When we look at the discretion, it's all painting a picture to say shorts. So even if it's took me out as liquidity, I'm not scared, because actually I've lost a little bit, but the move's still valid.
Yeah.
If we was to take me out with a lot of strong bullish pressure, I'm not looking to trade no more. Then my bias is wrong. Okay. Yeah.
Got you. One last thing I wanted to go through, I think, on just this example. So obviously this, for the purpose of the trade that we're talking about here, this high of the week is invalidation.
Yeah.
What would invalidate the context of the trade for you? Would it be getting and closing above that fair value gap, like the daily fair value gap?
Yeah, so I think that, exactly. He already knows the strategy. Yeah, exactly. So if I see a strong close, again, not on 15-minute, we're talking daily, hourly, a strong bullish candle close, it's disrespected. And I'll wait. Again, we might form new structure and then I'll reanalyze. I'm always reanalyzing. I don't ever expect to enter at a level. I'm always just waiting. Again, I had that area marked out. We took liquidity. I was like, maybe. You know, I'm not going to enter until I see it. Yeah. So, and that was at this point.
Got you. All right. Yeah, I mean, it makes sense to me. For me, it's like, it's a good transition of what we've seen in theory now actually in live markets, which is nice.
Yeah.
Do you have any more examples that you want to go through with us, or?
I think those are probably the best ones, yeah. Because this ones were the entry and the scaling. I think those are the ones I marked out. I could probably find more, but yeah, I think those.
One last thing I wanted to talk about on this one.
Yeah.
Target point. Yeah. How did you determine your target on this one? Because I remember on a daily chart, it looked like kind of the low of a...
fair value gap.
I think so, yeah.
Let's go daily, actually. This is like a very nice trade. This doesn't happen a lot. They're a lot smaller RRs. Okay. This is quite a clean one. I think with this trading specifically, it is a key, like I do keep saying it, but because we took out yearly highs, you know, I don't expect to just take that as a retracement. I do expect a lot more of a push down. Okay. And yeah, okay, this area I was monitoring because like I said, fair value gaps are still important. And look what happened really. You could have really said that's a reaction to the upside to push higher. But I was still monitoring. I was still looking when I'm in the market. I'm still looking. I had this area here. Even here, this was a key order block, you know, and this fair value gap. But because my bias as a whole was bearish, I was happy to say, and considering the context, I was happy to, you know, monitor it and see how we were pushing. And I'm pretty sure we was pushing quite strongly. Yeah. So look, if you look at the 4 hourly, that looks very, very nice. Very clean. We've got a 4 hourly fair value gap. And this is when I will analyze when I'm in the trade.
Okay.
So I'm looking at it, I'm looking at how the 4 hourly is closing, very clean. We've got order block, we've got a 4 hourly fair value gap, we've got another order block, we've got another 4 hourly fair value gap. This one isn't, but this in itself looks very, very clean. And if you see this, look, we've took this low and we've closed below it. Okay. Which to me, again, is suggesting lower prices.
Got you.
So yeah, and I will do a little bit of analysis in the trade. Again, if the selling pressure isn't so strong, I wouldn't. But because it was strong and I was seeing what I needed to see and wanted to see, I was happy in taking it. Considering the days as well. Because this isn't on Friday. This is on Wednesday and Thursday. That's
kind of like
midweek.
your prime days, right?
Yeah, exactly.
Yeah, I mean, it makes a lot of sense to me. Again, going from the theory to now seeing it on the chart. And again, like you said, this was a pretty textbook example for you for what you're looking for. But I think that's really, really clear, at least from my eyes. I think we'll wrap this part of it up. Just wanted to give you a massive thanks for giving us an insight as to what you do. This is like the source that everybody's looking for.
I hope.
Yeah. But no, really, really appreciate it. It's been super, super clear. At least for me, you've been able to see me start to identify what you're looking for as well.
They got my exact strategy. Hey, guys, try it.
There you go. The thing that I think I'm most fascinated about and the thing that I probably resonate with most is, from what I understand of your journey, you spent the first few months, maybe years, trying to scalp the 1 minute time frame.
Yes.
What was it about that stopped you from making money, and what shifted? What changed for you to start doing something different?
I think honestly it was everything, because at that time when I came into trading, I was a straight beginner. So, everything was new to me. I got a mentor and he taught 1 minute. So obviously I stuck with it. But with that, my routine wasn't in place. I wasn't consistent. I was trading for about 3 months, stopping for around 4. Same, that cycle literally just repeated itself. And, it's a bit of both. I think it's a bit of everything that made me just not see results at all. I was risking a lot, and especially on the 1 minute, it's very, very volatile. So, when you're risking that 1%, you're losing money very quick, especially when you're a beginner. So it's hard to handle. So I think with everything, I just never saw results. I never saw consistency. But I can't just say it was the 1 minute alone and the strategy alone, because it was also my routine and my lifestyle then.
Yeah. I always say I feel like I'm in a very fortunate place because I get to speak with a lot of traders, and I have done over the last few years. I find that actually trading the lower timeframes is a really popular choice for a lot of people. And obviously this was a path that you went down as well. I did very much in the same at the start of my journey. I probably started, I think, at the lowest at a 5 minute time frame.
Yeah.
1 minute sounds insane to me.
Too
It
scary.
sounds crazy. What do you think lures most people in? Like, why do most people go down to the 1 minute time frame to try and find profitability?
Get rich quick. It's simple. It's get rich quick. You can come into a day, and there's a lot of traders out there that are, they take one trade a day and they're making 6, 7K. And that's probably low to a lot of people. People are making 100K, 50K in a day. And, if we look at reality, that is absolutely crazy. Those are crazy numbers. Yeah. And if I was to come into the industry and I've seen someone make 50K a day, I want to learn from them. This is just natural, money, quick money just grabs people's attention. Yeah. And I think that just what lures a lot of people into, intraday or 1 minute or 5 minute, because it is money quickly. You don't need to be in a trade for long, and you're up 2K, 3K. Why not?
Yeah. I think the breaking point for me, and maybe this is something you'll resonate with, I always put it like kind of poetically. And I say that trading requires 2 skills. Step 1 is you have to learn how to make money.
Yeah.
But step 2, you have to learn how to keep it.
Yeah.
And I think that's where a lot of 1 minute traders or lower time frame traders will say where they tend to struggle.
Yeah.
Because it's very easy and you can make a lot of money very quickly, like you said.
Yeah.
But keeping it is another story.
And then that was the cycle that I was going through. Of course, I'd hit those trades and I'd make 3, 4K. I'd pass a challenge in 10 minutes, and I was just, oh my God, I've just made this in 10 minutes. So I'm thinking in my head, oh, this is going to happen on a live account. I've just made 10K in 10 minutes. And then it comes to it, I've just blown 10K in 1 minute, quick at the time. And that is literally and that was my journey. I was trying. I'd make the money, but I didn't know how to keep it. And I never got to a funded stage. I never got to a payout stage because I was chasing the money.
So what point did you have to hit before you decided that something needed to change? Because at least from what I know of your story, actually your progression has happened, at least from my perspective, relatively quickly.
Yeah.
I haven't found that, at least like, I'll tell you a little bit about my journey very briefly. I lost money for 6 years.
Oh, damn.
It was a long time.
Oh, damn. Dark 6 years.
So now when we switch roles and I hear about your story, actually you learn things quite quickly, at least relatively to me.
Yeah.
What is it that got you to the point of actually wanting to switch things up and find something that works better in alignment for you?
I think, first of all, it sounds quick. Mentally, it was not quick at all because I've always been fixated on success and I've always been fixated on making money and just living that sort of lifestyle. So that hasn't been just that 1 year of trading, 3 years of trading. That's been my whole life. So, I've always wanted to, indulge in something and see results from it. So I think when I wasn't seeing results for those 2 years, it did break me down. It made me feel low. It made me feel not good enough. And especially having an Asian upbringing and you're trying to prove to your parents that, I'm trying to find my own way to success. They're not going to support. They're just not going to support. So not only are you mentally beating yourself down, your parents are also, and your family also don't understand. So I think it does sound quick, but I fixate very hard on things, and success was one. So when I wasn't successful in a sense, or wasn't at a level that I wanted to be, I would bring myself down a lot, and I'd put myself under a lot of pressure. And I think over time, it was an overtime thing because this happened for 2 years where I didn't see results. But I was very, very inconsistent. Why? Because I was at school. I was at sixth form, inconsistent. Then I had, a part-time job. I couldn't focus. Then I ended up getting a degree apprenticeship. That's a 9 to 5 in construction. I had no chance of trading. And then I literally had to quit. In order to, actually come to the charts and actually make that decision. But I couldn't have just quit school. That wasn't a chance for me. I couldn't have just quit my brand new degree apprenticeship. Do you know what I mean? So it genuinely was the journey. And I think it was how bad did I want it. So I quit. I think a lot of people will find it crazy. I got a very good job in project management, degree apprenticeship, 9 to 5, which at the time it seemed like a very, very big thing. And my family were very proud of me. They was like, wow. And that is kind of what we're brainwashed into thinking. But I actually cried when I got the acceptance letter, and I was not happy because that's not what I want. That's not my definition of success. So it got to a point where, I was hating life so bad. I had to quit. So then when I did quit, I was able to put in more time in trading, more time, and invest it into myself. And I was earning a lot less. I went from working a 42-hour contract to a 12-hour contract. Imagine my parents, they're not, like I had to lie to my dad, but it's how bad you want it. So that 1 year of, quitting my 9 to 5 and being, I want this bad. I'm not just doing it for me. I'm doing it for my mom. I'm doing it for my dad. I'm doing it for my family. That's just how it happened, and it happened because I took it serious. But before that, I wasn't.
There's a beautiful quote that I always like to repeat to people, and it's something that stuck out to me. And it says something along the lines of, "Not every day is a good day, but there's something good in every day." And I think most people overlook that, right? It's so easy for one bad trade, one blown account, one poor period of time to consume you and to feel like everything. And we forget, exactly like you shared, to zoom out. To just remember that there are many more days, weeks, months, years ahead of us. And this is not our whole life. It's one chapter, it's one page, it's one sentence sometimes in a very long book that we are writing in life, right? So I think that's great advice for a lot of people. Did you ever find that you always had this ability to not allow kind of outside emotions impact your trading? I
think, my trading journey kind of, let's zoom out a little bit. All right. So obviously I was trading for 2 years inconsistently. Came to that 1 year of being consistent. In that 1 year, I got my first funding, got my first couple payouts. I hit 5 figures in payouts. And that was just in 1 year. But obviously I had the 2 years prior. In that 1 year, my thing is that to stay consistent, because my issue was inconsistency. To stay consistent, I'm going to start posting. I'm going to start holding myself accountable. So it wasn't for, oh, do I look like nice on camera? No, I don't care. It was genuinely for consistency, kind of went hand in hand. So my thing was that if I can post every day on social media, I can show up to the charts every day. You know what I mean? So it was like a no excuse kind of thing. So then obviously over time, the followers came, the traction came, the comments came. And it does get to you. Like people will be lying if they say comments don't get to you, because they do. They do get to you. But I think when you solidify your beliefs so much, it just can't, you naturally can't stop. Like, you know, on my like trading journey, people will say a lot of, you know, nasty comments, and a lot of people would stop posting and stop being transparent or stop trading. But I think for me, it was just, I knew it was possible. No one could shift my mindset of knowing that it was possible. And to this day, I know, you know, I've hit levels, but I want to reach those bigger levels, and I know it's possible. Like, no matter what anybody says to me, no matter what comment, it just can't get to me, because I know it's possible. I might not be there right now, but this is why I say focus on the future, because you can get there. And that, like, mentally does a lot for you. Like, that mentally can get you through loads of things.
You mentioned something actually in the earlier episode when we shot the strategy. You mentioned a word, and I kind of want to probe on it a little bit to see what your thought is. You mentioned manifestation. Yeah,
love it.
Right? Talk to me about it. Like, is this something that has been helpful for you? How have you used it? What impact do you think it's had on your trading?
So first of all, I love it. I think it's so important. If you're unprofitable, you need to start doing it. When I became profitable, I set myself a very strict routine. So I call it now the KayzFx routine, but it's a very, very strict routine. And it was me, it consisted of me waking up at 5:30 every day. I'm a morning person. 5:30 isn't too bad for me, to be honest. My mom wakes up at 3 a.m. Like,
are you serious?
Yes.
Damn.
She's there early bird. So 5:30 was a little bit lighter for me.
You're the lazy one in the house.
Yeah, literally. So wake up at 5:30, and then somewhat in some order, it was gratitude, manifestation, journal, and read. So those were my and workout, but sometimes I wasn't too consistent on that one. But yeah, those mental things were non-negotiable. And I swear on anything, I used to do that and I did that every single day until I got my first fundings and payouts. Like, that routine is what carried me from being unprofitable to being profitable. Why? Because manifestation, what does that consist of? Reminding yourself of what you want in life. So if I'm waking up every day and I'm reminding myself, in 10 years, I'm going to, you know, live in this, and I'm going to drive this, and my mom's going to be with me this, and this, and that. That's going to drive me. I might have a bad day today, but look where I'm going. Or when I have a good day, it does make you feel good because you're working towards that long-term goal. And I think unconsciously, you repeating and reminding yourself that, you know, you're this and you have this and you have that, you naturally will gravitate towards getting it. You naturally act more. Like, one of my key things in my like affirmations was, I'm a 7-figure funded trader. And I'd repeat all these phrases 3 times. So I'd say to myself in my head, out loud, whatever, I'm a 7-figure funded trader 3 times. And I wasn't profitable. I was blowing accounts. But because I was saying it unconsciously, I started acting like it. So like, I wouldn't get mad if I lost a trade. I wouldn't go, you know, revenge trade. I wouldn't go blow an account, because 7-figure funded traders don't do that. They're calm when it comes to the market. And I think it's that mental, you know, that mental thing that pushes you, like genuinely pushes you. So yeah, I think it does so much. And I really, really believe if anybody tries manifestation just for, you know, a month, they'll feel 10 times better.
Outside of the manifestation side, do you still keep up with journaling, even with regards to just specifically for trading?
Yeah, I'm always journaling. Even when I was little, like, I was always journaling. I love writing about my day. I love writing about what I want to achieve just for my own self, because I like looking back at it. I like looking back at the progress. Like, I have my journal and it goes from, you know, 0 followers to 50K. Like, and you can see every week it grows, and the proof is literally there every week. I'm slowly growing. And if I feel like, oh, I'm not doing it, I look back, it's literally there. Like, and that's just a little tiny thing. And this is why I said it kind of came hand in hand for me, because I could progress and track my progress. But with trading, that progress is invisible. So it is harder, which is why I think it's so important to have that physical, reminder of what you're actually doing and why you're doing it.
Yeah. So expand a little bit on what specifically you're putting in your journal, because you mentioned there that you're not just tracking the trades, but why you're taking them.
Yeah.
I'm always surprised when I talk to traders and they're like, they don't journal. They're too busy. They can't be bothered. Again, it beats me.
Yeah.
But again, for the person that's watching this, that is maybe either inconsistent with their journaling or doesn't think it's important, could you explain why it's kind of a necessary or really important part of this and what to be putting in their journal?
Yeah. I think it's crucial, first of all. It's very crucial, especially when you're unprofitable, because that is your data. That is your trades. That is your psychology. That's you. That's you right there. All your trading. If you want to become a profitable trader, why are you going to analyze someone else's trades? Analyze your own. That it just is simple. And I think people like to, they will do it, because I know a lot of people that they mentally journal, but that only lasts you so long. That doesn't. Let's be real. You're journaling that trade 2-3 weeks later, you're forgetting your entry, your exit. You don't know what you entered. So I think especially when you're unprofitable, you need it, because for me personally, I tracked my trades, I tracked my win ratio, and I tracked my like monthly turnover, like percentage gain, and my weekly gains and all of that. And I remember at a point where I had been journaling, and I think I was 6 weeks behind me, 7 weeks behind me, and I was going through a losing streak, and I was, feeling a bit beaten down, disheartened, and feeling like maybe I should switch strategy. But all I did was go back on my journal, have a look. I was green pretty much every week before that. I had, if anything, I had a break-even week. That's it. So I was like, actually, it's not that bad, really, is it? It's not that bad. So yeah, it does a lot for you, and it mentally pushes you when you're going through that hard time, because you have that data. It also helps with your trading, because if you're seeing that you're losing loads, something's not working, and you'll figure it out. I think a lot of people want shortcuts in this industry, but the answers are you have all the answers. If you tracked everything, your mindset, your routine, your goals, if I could probably pick out why someone's not profitable if they told me everything. And it's easy, because you can do it for yourself when you do track it, because you work at your best when you do pre-market analysis, or you've had breakfast before you trade, or just little things like that. Other people might know that they need to journal right after trading, because otherwise they're not going to do it. Do you know what I mean? But when you're going through that hard time, it's that journal that's going to help you. It's that journal that's going to push you. And when you're feeling like that strategy is not working, or you got doubt in your system, it's that journal. Same thing goes if you're trading a system and you don't know you're doing wrong. You can compare all the charts, all your data's there. Everything that you need trading wise is there. Why are you not doing it?
Alex Hormozi has this great quote, and he says, the long way is the shortcut, because the shortcut never gets you there.
Never does.
It's such a beautiful way to put it. And it applies to everything in life, right? Trading, exercise, but it's a pure focus on the idea of like, we have to prioritize process over outcomes. And it's something that we lose so much perspective of when it comes to trading, because managing money for a living, it's not easy, right? It doesn't come easy for every single person. Do you think every profitable prop firm trader can be consistent in a personal account as well? Because the environment for me is very different.
It's a good question. I think it depends on the type of trader they are. Like, I've met, traders that they full port a lot. So they don't have set risk on the table. They will just get in at, whatever lot size or whatever contract. And they'll get in. They don't have a set stop loss. They don't have a set take profit. But when they see they're in, like, let's say a $1,000 profit, they're happy with that. They'll get out. Consistently, they get out. But now imagine that's on your live. You're consistently getting 1K, 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 1K. Then you've just took a loss. Imagine you're in. You've not put a stop loss in. And then prices just dump the other way. You've blown your account. So it depends. I think prop firm industry, there is a way to master it by not, quote unquote, sticking by the book, but it's not consistent.
We had one guest that I spoke with a while ago, and they basically shared this idea that if you're using and playing the game of prop firms, but you're not doing it in a way that helps you to be consistent as a trader, you're wasting your time. You may get a few payouts here and there, but and I don't ever see this really happening, but if prop firms disappeared, do you really have a skill set that you can take elsewhere?
You don't.
And the answer is, for a lot of people, no. And I genuinely think that there are a lot of people in this space that do really well in the prop firm game. But if you gave them a personal account, they probably couldn't trade.
That's what I'm saying. And this is the thing, like people have learned to, win and master prop firm trading, because prop firm trading is completely different to personal trading.
Yeah.
Prop firm trading, you have rules, you have consistency rules. And at the end of the day, us traders, we get a prop firm account to get a payout. We have to abide by the rules and then get a payout. But people know how to master that. People know how to, run it up, profits, get payouts. But the same with that, if they blow an account, they would have lost that account, but they don't care because it's an expense.
Yeah.
It's set risk. You bought, $500 account, or if that, and that's all you've lost. That's it. You've lost it anyway. It's come out your bank account. So really, what have you lost? Nothing.
Yeah.
But on a live account, it's completely off it.
Yeah.
I haven't traded personal.
Really?
No, I haven't.
Interesting.
Yeah.
Is that going to be something that you try at some point?
I think definitely on the list to try, like, kind of stack up over time, not really actively trade, probably longer hold swing trades. But yeah, I started my journey on a personal, like everyone does, and blew it. And then I learned how to trade by prop firm rules. So a lot of, like one of my good friends, she's a personal trader. So she only trades her accounts, and she's killing it. But when it comes to prop firm trading, she doesn't like it. And I said to her, you can make so much money. You have a lot more capital. You can, earn a lot more money. And she just doesn't like it because she's saying, I don't like the rules. Because she learned to trade against those rules.
I'm the exact same.
Yeah. You don't like them?
So I started trading in 2012, right? I lost money for a long time, right? Lost money for 6 years, broke even for a few years after that. Took me a long time to find profitability. But I have been conditioned to trade a personal account. Yes. And on a personal account, you can't fuck about. Like, you can't take a 50% drawdown and just snap back and make it back tomorrow. Like, you have to remember, you lose 50% of your account.
You've lost it.
You need 100% return just to get back to break even.
Yeah.
For most people, that's psychologically, that would break most people. But I think the problem that I have, and is honestly something I'm still working on, is to really succeed, and you kind of touched on this as well, to succeed in the prop space, you have to learn in some sense how to gamify the system and play by the
100%,
rules.
100%, yeah.
But the problem is I'm naturally quite a conservative trader. And for me, gamification and like
it's different.
It's a weird space. You give me a personal account, I will give you full faith that in 12 months it will still be alive and there's a good chance I would have made some profit.
Yeah.
In the prop space, struggling.
It's different.
It's so weird.
It's hard. No, but it's true because you've had your journey through personal. I've had my journey through prop. 100%. And that's why I can go onto any prop and think, oh, that's fine. Like, that's not too bad, really, is it? Because that's how I've learned how to trade. You've learned not having to think of these rules. You probably thought max loss, max daily loss. Like, what?
100%.
So it's a foreign language in a sense, but like I said, regardless, you can still learn. Like, there's never,
for sure.
There's always enough time to learn.
For sure. Right. I want to start winding things down a little bit.
Yeah.
I got two things which I like to do with guests towards the end. One
scared.
of them's don't be. One of them is fairly typical. Few quick fire questions.
Okay.
Just to get your honest thoughts on stuff. And the next one I will explain. It's going to become a little bit of a running theme in the show.
Okay.
You don't have to be scared. Right? So, few quick fire questions. In your opinion, what's one behavior that kills funded accounts the fastest?
Over risking. Yeah.
For you personally, what's one rule that you'll never break? Or is there a rule?
That's a good one. Wait, I have to think now. This isn't really quick fire. Gosh, I don't think so. One rule that I would never break. I feel like one rule I would never break is probably not put a stop loss on. I've always got a stop loss on my trades.
Fair. What is one habit outside of trading that improved your mindset the most?
Affirmations, words of affirmation.
Nice. Yeah. And last one, what is one thing new traders should stop chasing?
Money.
Yes.
Stop chasing the money. Stop.
Nice. Okay, so last part of today.
Okay.
We're calling this one's Confessions of a Trader.
Oh no. Oh gosh.
So what I've done, and we're doing these for the first few episodes.
Yeah.
I've compiled a list of conversations that I've had with traders over the time and compiled them into something that I'm going to read out to you. Think of this as a trader confessing something about their journey. And I want to hear your raw thoughts, your experience, your advice, if somebody was giving you this story, and on what you'd advise them to do, right? This trader has said, I've been trying to embody the identity of a profitable trader, but deep down, I don't believe I deserve it yet. I journal, I visualize, and I tell myself that I'm disciplined, but every time I take a win, I feel like an imposter. How do you genuinely build confidence without faking it?
My raw thoughts is that's crazy. I've never heard someone say something like that. I feel like you're kind of preying on your own downfall in a sense.
Self-sabotage.
That's the perfect word. Self-sabotage. You're self-sabotaging your success and your own mindset because you're seeing those results and you're still not happy. So I think you'd have to, my advice would be just go back to the drawing board. Remember what you want. Remember what you need to do in order to get there. Because if that's a profitable trader, what are the traits of a profitable trader? You know, consistency, journaling, all these things. You're doing them anyway. So be happy and take some pride in that because not a lot of people can do that.
Nice. I like it. Beautiful way to wind things down today. Kayz, it's been an absolute pleasure. I've really enjoyed today's conversation. I knew I would.
I know, we said it before.
100%. But honestly, it's been, you've got a lot of wisdom for someone that's so young. And I think a lot of positive words of experience and lessons that I think a lot of people are going to take away from today.
I hope so.
So genuinely, thank you so much for coming in.
It's been a
really
pleasure.
Appreciate it.
Thank you.
Thank you. Guys and girls, over to you. As always, I want you to let me know in the comments below, what was your biggest takeaway from today's episode? What was the one thing that Kay shared that really shifted your mindset, changed your perspective, something that you're going to apply into your trading that's going to help you to become more consistent? Share it in the comments. We're going to be reading every single one. And of course, as I've mentioned before, if you want to put your trader confession into one of these episodes so you guys can take part, make sure you drop it in the link in the description. Make sure you like the video, subscribe to the channel, and I will see you in the next one. Take care, guys.